morning, everyone, and welcome to Bank of Jamaica's first quarterly monetary policy report press conference for 2025. Given that this is the first such occasion for the year, I'll take the opportunity to wish you all the best for the new year. Thank you for joining us this morning, whether face to face or online. We have with us this morning Governor Richard Biles, Senior Deputy Governor Dr. Wayne Robinson, Deputy Governors Robert Stennett, Natalie Haynes, and Dr. G.D. Lewis. Our agenda is as typical. Governor Biles will speak regarding the bank's latest monetary policy decision in the context of its outlook for inflation and the overall economy against the background of the economy's performance for the last quarter. After the presentation, the floor will be open for the question and answer session. Governor, over to you.
Thank you, Melanie. And good morning to everyone. Welcome to this quarterly monetary policy report press conference. Last Thursday, the bank's Monetary Policy Committee, the MPC, deliberated on its policy stance in the context of a set of favorable macroeconomic data and forecasts for Jamaica, albeit colored by uncertainties relating to the economic policies of Jamaica's main trading partners and their potential impact on Jamaica and the rest of the world. From those deliberations, the MPC determined that the current level of policy rate continues to be appropriate to support inflation remaining within the bank's target range of 4 to 6%. As such, the committee unanimously agreed to 1. Maintain the policy rate at 6% per annum, and 2. Preserve relative stability in the foreign exchange market. Briefly highlight the factors which underpinned the MPC's decision, starting with the most recent and positive economic data. On the 17th of February, the Statistical Institute of Jamaica, Statin, reported that headline inflation at January 2025 was 4.7%, representing a general declining trend from the 7.4% at January 2024. Core inflation, which excludes the prices of agricultural food products and fuels from the CPI, was 4% at January 2025, remaining consistently below 6% since July of 2023. This outturn reflects the fact that the sources of inflation have been moderated. First, the private sector's expectations of future inflation, a key driver of headline inflation, continues to fall. In the bank's December 2024 survey of businesses' inflation expectations, which was conducted over the period the 25th of November to the 21st of December 2024, respondents lowered their expectations for inflation over the next 12 months by more than 1 percentage point. This represented a continuation of a downward trend observed since the middle of 2022. Supporting lower inflation is the recent positive developments in the prices of imported intermediate and final goods. Let me explain. The average price of grains, including wheat, corn, and soybeans, for the December 2024 quarter was lower by approximately 15.1% when compared to the December 2023 quarter. In addition, average oil prices for the December 2024 quarter was lower relative to the previous year and are projected to increase only marginally over the next 2 years. Inflation in the United States, which directly affects the prices of consumer items imported by Jamaicans, decelerated to 2.9% at December 2024 from 3.4% a year earlier. On the other hand, shipping prices increased for the review quarter relative to the corresponding quarter of the previous year. The third factor supporting low inflation is that both the change in the exchange rate and businesses' expectations about its pace of depreciation in the future have remained relatively stable. At the 19th of February 2025, the exchange rate, notwithstanding some two-way movement, had depreciated by just 0.3% when compared with the rate on the 19th of February 2024. This is a slower pace when compared to the 1.9% depreciation for the same period a year earlier. Foreign exchange market has been adequately supported by the bank's use of its healthy reserves to augment flows in the market. BOJ sold US $1.1 billion via its BFIXit facility over the 12 months to end of January 2025, compared to the sale of $897 million over the 12 months period to the end of January 2024. However, it is important to note that the bank net purchased approximately US $1.1 billion over the 12-month period to January 2025. Fourthly, the deceleration in headline inflation reflected the impact of no upward adjustments in regulated prices, such as transportation fares. And finally, while employment levels remain high, anecdotal data suggests that wage pressures are moderated. The MPC is also mindful of the trends in interest rates abroad, as they, being a potential stimulant of foreign exchange demand, have been somewhat sticky in their downward movement. As expected, the U.S. Federal Reserve maintained its policy rate in January 2025 at the range of 4.25% to 4.5%. Further, average yields on long-term Treasury bills in the secondary market in the U.S. rose from 3.7% to 4.4% between September and December 2024. Let me now briefly discuss the inflation forecast. Over the next 2 years, inflation is projected to remain well anchored within the bank's target range of between 4 and 6%. This inflation outlook is largely consistent with the previous forecast that was shared with you in November of 2024. However, the balance of risk to the inflation forecast now appear skewed to the upside, which means that inflation could rise above the forecast. That uncertainty I mentioned earlier, related to potential economic changes among Jamaica's main trading partners, could have adverse implications for remittance and tourism inflows into the economy, as well as repercussions for inflation expectations. Worse than anticipated weather conditions in Jamaica could also continue to put upward pressure on inflation. On the downside, low inflation could result from weaker than projected demand growth. In relation to conditions, the economy is estimated by the Planning Institute of Jamaica to have contracted by 1.8% for the December 2024 quarter, following the decline recorded for the previous quarter. This contraction was predominantly reflected in agriculture, forestry, and fishing, hotels and restaurants. In this context, PIOJ projects that the economy for the March 2025 quarter will grow in a range of 0 to 1%, and BOJ projects that the economy will recover fully from the effects of the weather-related events over ensuing quarters. Real GDP for financial year 25-26 is therefore projected to grow by between 1 and 3%. Growth will be underpinned by expansions for agriculture, forestry and fishing, electricity and water supply, and hotels and restaurants. Ladies and gentlemen, Bank of Jamaica remains resolute in its commitment to continue achieving its primary mandate of price stability by maintaining inflation at 4 to 6%. In this context, the bank remains committed to ensuring that the foreign exchange market remains stable. The gross international reserves of the bank are healthy and are projected to improve even further over the next 2 years. This is in a context where the current account of the balance of payments has been in surplus for some time and is projected to remain so over the near term. The gross reserves at the end of January 2025 amounted to US $5.6 billion, rising from US $4.8 billion a year earlier. The level of reserves is more than adequate when compared to international benchmarks for adequacy. Looking ahead, the bank is prepared to adjust the stance of monetary policy if the risks highlighted here today materialize and impede our ability to attain the inflation target. Thank you, and I will now take questions.
Morning, Governor. Duran Pete out today. Governor, the new immigration policies being enforced in the US will more than likely impact our robust remittances that we have been seeing over the past years. What is your estimation of the likely impact? Because certainly we are supposed to be seeing, based on what we are hearing, a decline in remittances. What are your projections with that?
A bit too early to say, Durant, because we only have preliminary data for December. We don't have any for January as yet. So it's hard to say. I would say anecdotally, looking in the newspapers and listening to the news on the various other media, it does seem that there is a risk there, and we recognize that to be a risk. But as to the actual amount, it's very hard to say as yet. We need some more data, and we need to see that issue play out some more.
Governor, I'm a staunch campaigner of a better managed interest rate transmission. I would have spoken to you last quarter about it, and the response I get was somewhat timid. The underlying theme of the recent Jamaica Stock Exchange conference was its transmission. It's hurting and it's impacting small businesses. No other person but the Prime Minister also commented about it, that he is not comfortable with the complaints from the small business sector about interest rate going down, given that the BOJ has gone 4, I believe, consecutive declines. What the market has been saying, Governor, because they have been commenting, is that they are not comfortable with the response from the BOJ towards ensuring that there is this relationship and that the pass-through effect is more orderly, in the sense that no sooner than the BOJ reduces rate, there needs to be some adequate time that pass-through rate takes effect.
So, Durant, let's look at it objectively. When rates were rising, we moved rates quite a few times, more than 4 times, up before the banks began to adjust their rate. So there's a lag period where the banks assess, is the central bank's rate increase going to be permanent? Is it going to stop here, or will it go a little further? In addition, even when banks began to adjust rates, a lot of the loans that were on the books of the banks did not get a rate adjustment. And why is that so? Because some of those loans, and in some institutions, up to as much as 40%, are fixed rate loans. And so they could not move them. But also the banks judged that they would rather take a little hit on their margin and preserve the viability of some of their customers by not moving rates on them, and certainly not moving it on them significantly. Remember, we moved 6 percentage points, 6.5, I should say. So what we ended up having is that new loans got priced at new prices. That is a little ahead of what it was before. And it is those new loans which need to be adjusted by the banks. Now, the banks, when rates are coming down, want to see where is BOJ going. Is it going to stop? Is it going to go down even more than it has so far? Because they don't want to make an adjustment and then have to make an adjustment again. Worse, that rates come down a bit and then external circumstances, some of the risks that we spoke about, mean that rates have to halt or go up back, and they have to adjust the loans back up. So I think we have to be a little understanding of the situation from the bank's point of view. What I would say is that those loans that were priced, the new loans that were priced higher, that the commercial banks could look at adjusting those rates down. And that's in the spirit that they expressed when they didn't raise some loans. Those that they did price higher, bring them back down to keep the viability of those organizations.
To put it succinctly, Governor, what the market is saying to you is that they would want to see a more aggressive posture from the bank to ensure that these new loans, as you say, is not solely determined by the banks whether it should come down. That the BOJ, through its moral suasion or through its policy prescriptions, ensure that that happens, because you can't allow the small business sector to be dying while the banks decide whether they're going to reduce a little here, reduce a little there. They need action now.
We have a set of monetary tools that we use, and I guess you could say moral suasion is one of them. But remember, what comes with us directing banks is moral hazard. I don't want to be the governor that says to banks, you must drive them to do what they may not consider to be economically prudent. What I have said to them, and I will continue to say to them, that those loans that they put on at higher rates on the way up, they should be looking to give some relief to those customers on the way down.
Good morning, Governor. Given the progress to date, do you see the geopolitical landscape and the turbulence wrought by the new U.S. administration kind of having an unsettling effect?
Well, of course, I think that it creates a degree of uncertainty, and that is what we don't want. We'd rather have more certainty in what the impact would be on the economy. So we are at a period of hiatus. We're not sure exactly what will be the impact on us. We have some idea of the risk involved, but to quantify it, we can't at this time.
Thank you. Governor, we have a question from Karina Bennett online. There have been reports of increased demand for US dollars given global uncertainties. Has BOJ observed any unusual patterns? Does it foresee any short-term pressure on reserves or any impact on the stability of the dollar?
No, we haven't seen any impact on the reserves. What we sell into the market is not abnormal or unusual for the year to date. And let me just explain. Last year, remember we sold 1.1 billion. as the market gets bigger, you would expect that what we sell into the market and what we buy from the market would also grow. So we sold 1.1 billion in, but we also bought enough to net retain 1.1. And what that means is that we really bought 2.2 billion, sold back 1.1 and kept 1.1. That 1.1 is what helps to pay for government debt, as well as add to our reserves. And as you saw in my statement, our reserves have climbed by nearly 500 million over the 1 year period.
Thank you, Governor. Go ahead.
Good morning, Governor. Even though you said that the country is not in recession, there are persons who think that you changed what you used to determine that, as was sent out in the release last week. Organizations such as SBAJ are requiring some things from the government in terms of the interest rates. 2 questions. One, I was told that the criteria was changed as to why you said we're not in a recession. Is that true? And 2, for the persons who think that we are, what do you say to them?
Okay, so let's walk through the technical analysis of recession. First and foremost, yes, 2 quarters consecutively of negative GDP growth qualifies for technical recession. However, I think that as economists, we need to look a little more broadly and understand all of the factors that impact the economy. When you look on employment, employment has actually improved over that period. When you look at business confidence, the index published by Don Anderson recently, as well as consumer confidence, that has also grown. So you have a situation where technically the GDP, the negative GDP growth for 2 quarters qualify as a recession, but other factors that normally would also be negative are not negative. And so it's not a clear-cut analysis and conclusion. That's the way we see it. We call it, when we have the data, we call it. When we don't have the data, we say it's not clear-cut.
Could I just add a rider to that, Governor? There's an adverse relationship between aggregate demand and inflation. You're projecting inflation. You're projecting that the inflation, there's an upside risk. But how do you reconcile that upside risk to be so confident that we are not inflation or we're not going into inflation when there are certain underlying factors which indicate that we might not be so comfortable in the projected growth that we're having in the upcoming quarter?
You mean that we're not going into recession?
No, as far as I'm concerned, we are in recession. We have 2 consecutive quarters of negative growth that the technicians say qualifies as recession. I don't buy what the PEIOJ Director General is saying, and I have a little issue with a technician getting, well, let me leave that. But I'm saying, from a technical standpoint, we are in recession. You can say that, yes, based on certain underlying factors, we will not be too long, or it will not be long-lived. But don't tell me that we're not in a recession.
What did I say?
No, I'm not talking to you. I said
right. So let me be very clear again. I said that technically speaking, 2 consecutive quarters qualifies as a recession. However, there are other factors that you would expect to support the direction of a recession, and we don't see them present. And in that sense, I say, let us just watch to see what those mean. In addition, I think we can all agree that Hurricane Beryl and the heavy rains that followed a month or 2 later would have impacted the country a lot. Certainly with agriculture, but also with, say, mining, where, as you probably know, the export port had to be moved offshore or closed down Same thing with the petroleum business had to be locked down. It would have impacted construction too. So maybe even if we are in technical recession, we will come out of it pretty quickly. So the point, Durant, is this. What is the conclusion do we draw from these 2 quarters of a recession? Is it that the sky is falling, or is it that there are some other factors that may be pointing to that it is only temporary and we can come out of it? I don't know, but I'm saying let's watch and see. And I agree that there are some risks out there that could have a profound effect on the economy. We need to see those risks play out a little bit more before we call it.
On an editorial note, Governor, that is how the position should have been ascribed and prescribed.
Thank you, Durant.
Governor, what's your take on the Fed keeping rates pretty as they were, and the pronouncement by Powell that he's likely to do so in the near future?
Well, let me ask Wayne if you would address that issue.
Well, the Fed's position is really reflective of what we have been seeing. We're in an environment now that's really characterized by policy uncertainty. There's a great deal of uncertainty as to how the incoming U.S. administration, how their policies on tariffs and on immigration, how that will affect inflation, how that in turn then would affect interest rates, how that would affect trade, how that would affect incomes, and how that would affect economic activity. So most central banks are in the position now of a wait and see, because the devil is going to be in the details. It's difficult to quantify and assess at this point how those changes in the policy, how those are going to actually materialize, how those are going to actually filter through to the American economy and the spillover effects to the Jamaican economy. So whilst we may play around with scenarios, we have to hold a cautious position now, and we think that is exactly what the Fed is doing.
One final question, last year there was some sort of controversy having to do with the announced increase in transportation fares, and there was some issue whereby the BOJ had made some pronouncement that it should not impact inflation. We saw that it did. There is a promise increase in transportation fare, which was rolled back, then it should now apply. Have you been consulted as to what impact this likely increase will be on inflation?
I'm going to ask Robert to address that, but historically, just to be correct, my recollection is that we made an error in advising as to what the effect would be of a bus fare cut. Right? And it turned out to be much less than we had originally expected. And so we apologize for that error. So just to get that straight, I think that was, but Robert, go ahead.
Thank you, Governor. Good morning. To answer the question simply, no, there has been no consultation about prospective transportation rate increases. Going back in time, as the Governor had said, we were consulted on the implications for inflation of 28% decline in bus fares. On the basis of that consultation, the government went ahead and did it. We understood at the time that reduction would have been temporary. But subsequent to those discussions, we've had no further insights. The impact of the reduction then, we have now been clear because it has been in the data. It has led to a fairly marginal reduction in inflation, I think about 0.07% impact, which implies that given the weight of bus fares in the Kingston metropolitan area that a reversal of that similar magnitude would have, for symmetry, the same upward impulse. But there has been no consultation as to the timing or the implications for it.
Just to be specific, we are talking about transportation fares. There's a increase which is supposed to be coming for taxi operators. That's the one I'm referring to. If there has been any consultation on the impact this will be on inflation.
No, same answer. So the only consultation that occurred in the past had been on bus fares, and there's been none on taxi fares.
Governor, I'd like to draw attention to perhaps what's in some sense galvanizing the nation, the SSL brouhaha. You'd be aware of all people are upset from all sectors of society. Does this put added pressure on you, particularly vis-a-vis putting in Twin Peaks to kind of find out what happened there and get a resolution? You'd probably really want to have the process be thorough, but then the public demands an immediate or some sort of answer. Does that put you in a predicament?
I'll have to catch me at a FSC press briefing for me to answer that. Two different organizations, two different remit. But what I can say is something on Twin Peaks, that we have been working assiduously at getting Twin Peaks legislation to cabinet. And as I've said before, it is a process to get legislation to cabinet, from cabinet to parliament, and then out. We've worked very hard on it, and we are on the verge of it going to cabinet. We have given it a lot of thought, a lot of consideration, a lot of consultation, both nationally as well as internationally. And we think we have something that will really advance stability in the financial sector considerably. In the meanwhile, however, we are practicing Twin Peaks, which means that the FSC and ourselves are jointly looking at all of the prudential supervision of the entire financial sector. So our people, along with FSC, look at both the banks as well as the non-banks. And that heightened supervision, I think, has given a lot more confidence to our view that the system is stable. Of course, there are institutions that are stronger than others, but generally speaking, we feel that the financial sector is well capitalized, is profitable, and is stable. And we will continue during the course of this year to practice and to work with the FSC on the non-banks as well as with the banks.
Through you, Governor, I've been asked to ask DG, the Senate, a question relating to what I asked before, that in his model, there's supposed to be another cut in bus fares coming in February. April, have you plugged into your model the impact this is likely to have on inflation?
Cut or normalization? Those have occurred. Yes. No. Last year. If this is a case, again, we are unclear about it. What we are...
Unless it's an old advertisement.
It could have been.
But I heard yesterday telling persons that to look out for it's moving from the 75 to the 50.
Yes, so as we understood it, the reductions have already occurred. And in the former Minister of Finance's presentation, they were supposed to have been normalized in the future. The date of that normalization was not made clear to us, but we understand that it would have been. In our forecast, we assume that they will normalize over the next 2 years.
Thank you, Mr. Senate. We have a question online from Siobhan Wayne Campbell. What would Bank of Jamaica consider to be a more appropriate metric of a recession in terms of realized indicators?
We don't have any quarrel with the current internationally accepted criteria. which is fundamentally rooted in GDP growth in consecutive quarters or declines in consecutive quarters. So that's an internationally accepted definition. All we're saying is, recall we're coming out of a very strong weather-related incident that would have had that a negative effect. And so does that mean we will come out of it very quickly? So even if it is technically a recession, is it a recession that we will come out of very quickly? And B, are the indicators of lower unemployment and higher business and consumer confidence not contrary to the concept of a recession and not supportive of the idea that even if we're in a technical recession, we will come out of it fairly quickly? That's all we're saying. That's all right, Duran? I have to check with Duran all the time. I'm sharp.
We have a question from Tenny Miller online. Please go ahead.
Can you hear me okay?
Yes, we can.
Okay. There was a movie that was called Enter the Dragon. And some people might remember that movie. We have a dragon that has now entered the room with the new Trumpization and the new world order by Trump, which is therefore going to create havoc to our economic system because we depend a lot on remittances, and we have documented and undocumented Jamaicans and nationals who are there who are going to be supporting the economy here. That's one. That is juxtaposed against the situation that has to do with the news report this morning, where the unions are restive because they are preparing to take up verbal and emotional weapon against the government because the 4 to 6 not going to go so. They're not going to be able to deal with the question of the 4 to 6% increase or wage situation. And we're talking about recession. And I hear we pay some comments intellectually regarding recession. How do we converge those three things, Governor? How does the economy and the financial sector position itself, knowing that those are three monsters that are confronting us?
Think about economists like, let's say, a doctor. You come to me and I see a trace symptom that kind of worries me a bit. And I say, go on do some blood tests and so forth and do an MRI or whatever, CAT scan, and come back and let's look on those results. That's exactly what we're saying. We see some stuff that we consider to be negative, right? Growth, 2 negative quarters. We see the international situation and the risk involved. However, we don't feel, just like the doctor, that we can call it, because we're not in the business of calling it. We're in the business of scientifically looking at the data and making a conclusion. And so you will get that conclusion from us in short order, especially when we get some remittance data for December and some remittance data for January. And when we see what is happening in the quarter after March, the quarters after March, we will see some growth. So let's wait and see. Let the data tell us whether we are in a long recession or we are in a short one that we will come out of quickly.
Governor, just following on from the gentleman's question, the governor of Florida, Ron DeSantis, has mooted that as far as remittances are concerned, and he specifically named Jamaica amongst it, he said, basically, in order to receive remittances, you have to show evidence that you're a U.S. citizen. Now, if this was to happen, and it looks likely that it will certainly impact remittance flows into Jamaica, and companies such as Lasco, Grace Kennedy, that are in that business. What's your take on that?
All I would say that your concern is our concern, and we will be looking with a hawk's eye at what is coming down the road. We have preliminary data. We're going to make that data get firm, and then we will draw a conclusion from it. So the same concerns that you have, we call them risks, and they are in our report. Right? And we will watch to see whether they materialize and to what extent they are profound or not so profound.
Could I just add a rider to that? The question is, how do we manage in this environment of heightened uncertainty, of increasing upside risk? Well, for one, as the governor indicated, the Monetary Policy Committee has taken the position to pause interest rate adjustments now. The other thing to bear in mind is, because we're so vulnerable, that's why we build buffers in the economy. And one crucial buffer that we have built is our reserves. And as the governor indicated, that is more than adequate if we use the standard IMF ERA metric. It's about 121% of that metric. So that puts us in a position to at least to weather whatever storm that is coming and to mitigate some of the impact of the fallout, whatever fallout there may be on remittances.
Just a quick additional follow-up on that. This leads to a situation whereby you could have certain unscrupulous characters, carpetbaggers, basically saying, look, okay, give me your money. I'm a US citizen. I will manage to get your money back home for you. That could have a detrimental effect. And it creates chaos. What's your take?
Well, I mean, DG Haynes can respond, but we have a very robust oversight of the remittance sector and remittance flows. We monitor these agencies both in terms of prudential standards and AML safety standards. But I defer to DG Haynes.
Thank you. So Al, you would have to take me through the process though. Take the money overseas, how it's going to reach here.
Basically, you could say, look, I'm a US citizen. Give me your money. You just came off the boat.
Right. So how is it going to reach to the recipient in Jamaica? Isn't that the end? Or is it going to reach here?
Yes.
From the US? Oh,
but
it cannot come through the remittance channels.
No, but if you're at home, say for instance, and I probably shouldn't be saying it, but I'm going to say it. I'm from the UK. For years, I've sent money home to my mom and said, okay, I'm sending you this.
Yes.
Fair enough. So they say, okay, you've got to prove that you're a UK citizen. All right. I'm not a UK citizen, for instance. Okay. I want to send money home to my mom. So in that sense, do I find somebody who can pull that off for me, who says to me, look, Al, I'll take care of that.
What you say. So the person now would go. Right.
Yes.
So, so if somebody is facilitating it for those persons and they go to a licensed remittance entity and comes in, we can't know, right? Because the overseas provider, they check the source of the funds and say, who is it sending to? Our concern here is the recipient. So if the recipient hasn't changed, then there's no impact here. The issue now that I think you raised that may be chaotic, I'm not so sure, is if what, they don't send the money. I'm not sure what is it you're saying. What?
There's no mean to measure what is coming in. So it is not.
No, but if it comes through the formal remittance.
No, he's saying it's coming through an individual.
In your pocket on a flight?
Yes.
But that happens, I mean, especially, that happens, that still happens, and you can't, it's something that is just errors and omissions out there. But we can't judge that. That still happens, and that will not change. That may increase, as you say. So somebody's going to start a business to take remittance in their pocket, pay plane fare, and come to Jamaica.
Just Jamaicans.
Must be very lucrative. The fees there, I don't know if that will be lucrative for the undocumented person. to be paying that fee, apart from giving you the money to bring. The fee that's going to be associated with that risk that that person is taking. Think about it.
Thanks, Mrs. Haynes. Mr. Keith Collister online would like to ask a question. Keith, go ahead.
Yes, I just wanted to, in the US, there's the National Bureau of Economic Research, which actually calls recession. So it's not just 2 quarters. It's also other factors, which is, I think, in line with what the PIOJ was saying. So we have a similar mechanism in Jamaica in terms of calling recessions. I further clarity on that point. And the second related question is, it seems as though a lot of the sectors last year, both the service sectors and the goods producing or goods sectors were all, not all of them, but the majority of them were down, which is why we're talking about a possible recession. I know you mentioned a few questions for recovery, 3 sectors, I think, for the coming year. But do you have anything to add in terms of those, what seem to be a fairly a large number of sectors? And I know you're also forecasting that inflation is, the risks to inflation are slightly higher versus negative, but loss in the aggregate demand on the downside, so a downside risk there. But do you have any further clarity on those why you think it's slightly higher? And the other question I have is, what are you seeing in terms of bank credits, which is normally another indicator, and in particular real inflation-adjusted bank credit? How does that? What are you seeing that could act as another indicator of whether or not we're actually likely to have what I would call a real recession versus the current projected recovery? So there's a few questions in one, I guess.
Let's start with the last question, Keith. Jide, am I correct? We have information that says bank credit is down somewhat in the latter part of last year. But in all of our interfacing with the banks recently, and by recently I mean in February, the indication is that their credit pipeline has picked up and is looking good. So that's anecdotal. The actual, I'll ask Jide to explain to us what's the latest data he has. Caught you off guard there, Jide.
All right, so I don't have the latest data, but what I can say is that as at end December, and it's in our annual report, we would have seen continued growth in terms of lending, both personal and commercial. What we're observing is that it's at a slower rate of growth than the previous year, but it doesn't mean it's declining. So I think we should take that as an indication that economic activity continues. The big part of their portfolio for the banking sector is mortgages. That continues to grow, not at the same pace in terms of double digits as it did in previous in preceding period, but it's still, I would say, healthy growth, with well over 2,000 mortgages being issued by the sector per annum. We have seen a rebound in installment credit as well. So I think we're looking at overall growth in the 6.5% to 7% annualized as at end December. So I would say there's no indication that there is a fallout there. And as the governor would have pointed out, the prospects, and we do a survey that comes out of RAPD in terms of expectations, and the prospects is that they believe that there's a pipeline of credit there. We do see on the corporate loan side that there have been some fairly chunky loans that have been repaid. As a supervisor, repayment of loans is a good thing. So we're seeing some adjustments there, but it's just for them to rebuild and find new corporate credits and build back up that rate I would have seen in preceding periods.
Just to follow up from what Jide just said, I think there's a preoccupation with, are we in recession? Are we not in recession? Everyone's getting hot under the collar. But really, what we probably should be really looking at is the fact that for 10 consecutive quarters, there's been a deceleration of growth. Probably that's something we should really be looking for. Because if you look at it really, tourism flows, I don't think we'll have any adverse weather conditions over the next couple of months. So really, we could bounce back, and you're right. But perhaps the focus should be the deceleration of growth.
Yeah, well, the deceleration could be called a normalization, because coming out of COVID, we had very strong growth, particularly from tourism, but generally in almost every sector, we saw a strong bounce back. And then there's a normalization process. So that strong growth was to compensate for periods of negative growth. And we've been seeing over that quarterly period you referred to, a gradual normalization back to the 1.5%, 2% growth that we have experienced for decades in Jamaica. Yeah. So I would term it more normalization than just deceleration. And I tend to agree with you that there's really a focus on this word. And I guess I understand why some people want, that word to be said one way or another. Yes, we are in recession, or no. For us, we are dealing with data and what that data says, and we're looking at the total picture and not just one part of the picture, because we are true to the science of economics. Let the data in every respect tell us where we are and where we are going.
Governor, just for the record, so loan growth for the full year was around 5% as at December, and in the preceding year it was at 9.1%, and in the preceding year it was at 13.7%. So there is a slowing down in terms of the loan growth, but it's growth. So we're not seeing any major fallout. There's a credit line that the banks have.
Thank you, Dr. Lewis. The final question is to Stephen Jackson, who is online. Go ahead, Stephen.
Hello. Hi, morning, everybody. I put a question in the chat still, you can read it. Thanks.
To the consumer segment at 27.5 billion, up more than 10% year on year. Does this signal that consumers are broke? If so, what is the implication for growth and development? Final question.
So, thank you, Governor. Take it from the look in my direction. No, so I think it's really important that we look not at absolute values, but as at proportions. So I know 27 billion or 30 billion or 35 billion sounds like a lot of money, especially when you look at it in your pocket, right? But we're talking about an entire economy, right? And there are over 1.1 million borrowers across different sectors, whether it be banking, microcredit, credit unions, and so on. So the NPL ratio is currently 2.5%. which is extremely healthy, right? 2.5% of NPLs. And so total loans in the sector are about 1.7 trillion. It's about half of the balance sheet of the entire system, right? If you're talking about 35 billion, it's not a whole lot. This is a healthy state of affairs. We get concerned if it goes to 5 or 7.5 or 10. We get concerned, but you would expect in an economy that you would have some bad credit. You just don't want it to become a burdensome on the sector. Provisions in the sector, meaning money that banks have put away to be able to write down bad debt, is for across all the banks is in excess of 100%, which means that for every bad debt, for every dollar of that 35 or 27 billion, using the number that was quoted, not saying that's the accurate number, for every dollar, the banks have a dollar in reserves that they can put away to write down that debt. That doesn't mean that people should not pay their credit. That just means that banks are being prudent, they're being conservative, and they're in a position to ensure that their balance sheet remains strong. They want to make sure that the assets that they have on their balance sheet pay them interest, and it's from that interest that they can remain a going concern. So I would say let's not get too hung up on the sound of the number per se. The system is quite healthy, and would have implemented, last statement, would have implemented back in 2013 a credit bureau system, where essentially borrowers can print their credit report and lenders can look and make good judgments. So we've had very good credit adjudication in our system, I would say, for the last 10 years or so, and it's improving. Thanks.
And on that note, thank you everyone for attending and for your participation, and we wish you a good day. Thank you.